welcome back guys to another video. We are almost done with the first month of 2023 and a lot of us are wondering where this housing market is going. Are home prices finally going to drop? Are interest rates going to drop? There is a common sentiment shared by most buyers right now that let's just wait and see what happens. So in today's video, I'm going to share with you national housing market stats to help you understand where the current housing market is and where it is headed. And at the end of the video, I will be sharing with you 3 top tips that you can use right now to take advantage of this sort of bearish housing market of 2023. So let's get started. The fastest way to get to an improved state is to make peace with the now and focus on your future goals that you're trying to accomplish. So first on the board, we're going to look at the current state, which is the now, and try to make some peace with it. Okay, so let's get started. So on the board, I'm going to talk about the national housing stats of the existing homes that have sold throughout the country. This is a report that the National Association of Realtors have just put out about 3 days ago. Today's the 23rd. They put this report out on the 20th. And this is a report for existing homes. It does not include new homes, but it does include single family condos and townhomes. So let's get to it. So first I want to talk about the rates. We all have heard this common theme over and over again. We've seen this in the market that the rates are double than where they were the same time last year. And right now the average rate is sitting around somewhere close to 6.12%. Now, don't take my exact word for that. It depends on your credit score, scenario, down payment, but on an average, it's sitting in the low 6s right now. This rate hike has caused 40 to 60% increase in mortgage payments, which has put a lot of buyers just plain outright out of the market. Moving forward on a national level, there were about 5.03 million existing home sales in the country, which was about 17% lower than the year prior. Remember guys, here I'm talking about December 2022 and comparing this to the year prior, which is 2021. So this is the full year sales of 5 million for existing homes, does not include new home sales. And then moving forward, we have about 2.9 months of inventory, almost 3 months of inventory on a national level, which was only at about 1.2 months of inventory, close to 1 month of inventory the year prior. That's a pretty big difference there. And then you have median home price sitting at around $366,900 on a national level, which is 2.1% higher compared to year over year from last year. So this is comparing December 2022 to December 2021, which is a year-over-year comparison. Moving forward, we have days on market. This year in December, homes sold in about 26 days on a national level. Last year, the same time, they sold in only 19 days. So not a real big difference, but it's definitely showing you that rates going up is causing all this to happen. It's caused a lot of people to just outright be priced out of the market. And it's just causing a lot of the general population that even though they may be qualified, they're just holding back, waiting to see really what is going to happen. The holiday season has definitely had an impact where a lot of people were just with family and not really shopping. But the big factor has been interest rates because we've yet to see income or job losses drop in this country. It's mainly been interest rates doubling over the year. Okay, now moving forward, we have distressed sales made up only 1% of home sales last year. A lot of clients ask this question. It's a very common question thrown out there and might be in a lot of your minds that are there going to be foreclosures? Have there been foreclosures last year? Are people being able to make their mortgage payments? Well, this number shows you that only 1% of home sales on existing homes nationally were due to distressed sales, which are foreclosures, short sales, etc. And 31% of home sales were first-time home buyers. Stat is a little higher compared to the year prior. It was around 28%. So first-time home buyers are still making chunk of the purchases in today's market. If you're getting real value out of this video, please hit that like button, because by you hitting that like button, more people like yourselves will be shown this video by YouTube. And don't forget to hit that subscribe button to stay on top of your real estate game, and leave me a comment below, because I love to hear from you. Thank you so much for having confidence in my content. Now that we've looked at the overall stats, let's look at what's happening in the different regions throughout the country. NAR, National Association of Realtors, have divided the country into 4 different sections: Northeast, Midwest, South, and West. So starting in Northeast, we're going to compare home sales and then also look at median prices. So home sales saw a 28.8% decline in the Northeast area, and median price went up 1.6% in that area. In the Midwest area, home sales were 30.3% down, very similar to home sales being down in Northeast, and median price went up about 3%. In the South, we saw home sales drop 33.1% and median price go up 3.5%. In the West Coast, we saw home sales drop by 43.4% and median sales price was pretty much flat. There was like a $200 difference there. So let's just call it flat, no difference there at all. So looking at both sides here, looking at the data here, it's probably making you wonder, well, these numbers that we're looking at are on a national level. So mind you, if you're in your local area, there may be scenarios or opportunities or deals that you see that are selling below list price, but on a national level, we have yet to see median prices drop. And that is because even though demand was significantly lower, and you can see that home sales prices 30% here, 30%, 33%, 43%, even though demand is significantly lower, there is enough demand that is causing homes to sell, and there's still enough turnover on the existing home sales side that home prices are still hanging on strong. Now, we don't exactly know where they're going to go in the future, but you know that the rates went up starting, I believe, middle or end of February in 2022, and then they continued to rise, and they were very high in the mid months, and then they flattened out, and then they went up and they flattened out, but they pretty much doubled, and we saw almost 9 months of them staying at a high rate. But the demand was still there that caused the homes to still turn, or sellers to find buyers for their homes. Now, there are scenarios out on the market. If you haven't checked my video out that I did last week, click on the link above where I talk about the Bay Area and the Sacramento market. And in that video, I talk about the suburban areas of the Sacramento area, where on average in December, the days on market went up to 50. Now, that's an average. It may change in your local area, but that shows you that in those areas, homes are turning in about 50 days. Now, that number was in about 40 days in November, but even in that report, you can see on a local level, home prices have yet to really drop significantly, where they'll start showing up on graphs and charts, and they haven't been showing up on it yet, even though rates went up for the last almost 9 to 8 months. Now, nobody really knows what's going to happen into the future, and I've talked about I talk about this in all of my videos, that it's very hard to predict the bottom of the market and the top of the market. No one really knows where it is when you're actually in that time of the market. So it's going to be very interesting to watch what happens to the job market, inflation, and interest rates, because I talked about this before, that the job market may be a big X factor here, where if we start to see more layoffs on a very high national level, where it's really impacting everyone in this country, because the Federal Reserve is really doing their best to slow down the cash flow of money, which in turn may cause consumers to spend less money in the market, which will reduce the revenue for companies, and then companies will start cutting costs and they'll start laying people off, and that'll be a ripple effect. So that is going to be something that's very interesting to watch month over month, quarter over quarter, to see where the job market data is, because right now unemployment is still at a record low. Other thing is going to be that's going to go hand in hand, and see what that does to the inflation, because if inflation number starts to go up, then the Federal Reserve may start to increase the rates more, and that all of this may put downward pressure on the prices of homes. Now that we've made peace with the current now and looked at the numbers, what they look like right now, let's look at the opportunities that you can take advantage of in this sort of bearish housing market. So number one, right now, which goes hand in hand with interest rates, as you know that the demand is significantly lower. If you wanted to quantify that, depending on what region you're in, it may be 30 to 40 to 50% lower numbers than where they were the year prior. So if you were in the market last year and there were 20 offers on one home, now there might be 10, or if there were 5, now there might be 2 or 1 offer on a home. So demand is significantly lower, and that's a huge opportunity if you qualify, if the numbers work for you right now. That's a huge opportunity for you to pick up a property, maybe even below list price, and get terms that are favorable to you, the buyer. And number two, new home sales. I know this report that we talked about earlier was just based on existing homes. We didn't touch upon new construction, but new construction is an area that you can really take advantage of because a lot of people that had bought homes, say, for example, put an application, didn't buy yet, but put an application to buy a new construction home, say in the beginning of 2022 when the rates were sitting at 3.5%. The homes took X amount of months, say 6 months to complete. Now you're in August. Rates are touching 7% or 6%. Now those buyers in most cases do not qualify because their mortgage payment went up like 40 to 45%. So now you have builders that may have lots of inventory available that they need to get off their hands. And if we're talking about 2.5 or 3 months of inventory on the existing sales side, on the building side or the new construction side, we're looking at about almost 6 months of inventory. So that gives you an upper edge there to go in there and price negotiate to possibly pick up a premium home at a base price, or get a builder or get credits for closing costs. And what a lot of builders are doing now is if the average rate is sitting at like say 6%, with a builder you might be able to get a rate that is almost 1% to 1.5% lower than the average rate in the market. So a huge opportunity there. So if wherever you are watching this video, I'm here in the Bay Area. There's not too much new construction here, but if you're in an area that has new construction, there's a huge upside and opportunity there for you as a buyer. Number three, inventory is increasing. As I mentioned here on the existing home side on a national level, we're seeing about almost 3 months of inventory coming on the market or that's available right now. Now, your local market may be different. Like I mentioned in the video that I made last week, which is based on the Bay Area. In the suburban areas of Bay Area, and that inventory is around like 1.5 months. With national level, it's about 3 months. So it may differ where you are, but overall inventory is increasing. Another factor of this inventory increasing is now we're getting out of the holiday season, traditionally speaking. Housing marketing cycle, you'll start to see more inventory that comes up in the spring and summer months, and that's going to happen. But the other factor is the demand is just lower and homes are taking longer to sell. So a huge upside there again. If there's homes are taking longer to sell, there's more inventory, that gives you the opportunity to negotiate and buy a home at a lower price as compared to where you would have bought the same home the year prior. So if you're a buyer right now, here's what I would focus on. Definitely get pre-qualified and talk to a loan professional in your area, because what that's going to do is it's going to allow you to understand the type of home that you're looking to buy compared to where you're living, what that mortgage payment is going to look like. So you're going to be able to compare that actual mortgage payment with what rent you are paying for an apples to apples comparison to get an idea of, okay, is it the same as rent? Well, then it's a no-brainer. Is it $500 more than rent? Is it $300 more than rent? Is it $2,000 more than rent? And that's going to give you an idea of where the actual mortgage payment is compared to your rent, and it's going to make you understand that, okay, is this a good decision for me or not? So it's very important that you get pre-qualified and know your numbers, because depending on where you are in the market, where you are in the United States, what local region you're in, you might be in a place where buying a home absolutely makes sense because the numbers are equal to rent, or in some cases just a tad bit higher than rent. Number two, save. It's the time that you must save. Inflation's very high. Everything is very high. So you must save money. And if you're looking to buy a home, try to save at least 4 months of reserves for PITIs. What do I mean by that? Whatever your principal, interest, taxes, and insurance is going to be on your future property, once you talk to that loan officer, figure out what that number is and have at least 3 to 4 months of the reserves saved for a rainy day just in case something happens. And number three, don't over or underestimate your numbers. That's why it's very important to talk to local professionals, talk to the loan officer, and if you're buying a property that maybe has some deferred maintenance, don't underestimate those numbers right now. Bring in a contractor, bring in a friend that knows construction, and just don't try to eyeball things and see, oh, I have an idea of how this looks, because in most cases, you end up underestimating that. In some cases, you end up underestimating how much you can qualify for. So talk to professionals and know your numbers, because it still is a great time if the numbers are right for you. If the numbers are not right for you, then do not buy in this market. And like I've mentioned in my other videos, that this year is going to be a very similar year to what we've seen in the last 6 months. It's going to be one of those years where there's not too much movement. That's all I have for today. Until next time, this is Karan Singh.